Hi guys, welcome back to Saving Salvage and welcome back to the channel. You join me today in my kitchen, so I'm going to apologise in advance for any background noise you might hear. I've got my daughter sat over there who's only a few months old, so she might chirp up from time to time. I've also got a dog that's wandering around as well, she might bark, and I've also got the washing machine going in the background as well. So guys, in today's video I will be discussing the pros and cons to the four types of finance agreements I've got here, which is a lease deal, a PCP deal, an HP deal, and a classic bank loan. I will be discussing the pros, the cons of each of those finance deals, and I'll also be working out the cheapest one to go for based on one particular car. Now, the four types of finance options I've got here, they are all quite different, and one particular one isn't like hands down the only one you should go for and the other three are worse off. That is not the case. They are all slightly different. One is designed to keep your monthly payments down, which will maybe mean someone can afford a more expensive car that they want and they're not too bothered about the overall cost. They just care about the initial upfront cost. And there's others that are flip reverse of that, where you pay more per month but you're saving money in the long term, i.e. you're paying the least amount of interest. Some people want the cheaper monthly, some people want the cheaper overall cost. That is why they are two different finance packages there. And then you've also got a lease type of deal, which doesn't directly mean you own the car, but you just pay a rental agreement every month to use that car, and at the end of the agreement you give the car back. People will prefer that because it means they're not tied up to a £30,000 car in their name, and they might just think it's easier just to rent a car and then give it back at the end and get another one. Some people may prefer that, and it usually is actually a cheaper option per month, even over a PCP. And then you've got a bank loan, which again is for people that don't like buying cars on finance, would rather get a loan from their bank, and then they're not tied financially to that car, so they can sell it and buy a new one whenever they like without incurring any settlement fees on an HP or a PCP agreement. So they are four very different types of finance, and depending on what you want from the deal and the car completely depends on what finance option you should go for. I have personally done all four of them, so I'm quite well experienced on each one, and there is no definitive this is the one you should go for, it's the cheapest here, it's the cheapest monthlies, it's the cheapest interest. That doesn't exist. You have to kind of pick one that you would prefer. Would you prefer to have a cheaper overall cost or the cheaper monthlies? It all depends on your situation and what you want at that time of buying the car. And it also depends on if you're going to keep the car as well. Do you just want it for 3 years and then you want to get a brand new one because of the warranty? Most cars are 3 years warranty. So do you want that car for 3 years, then you give it back and get another brand new one for another 3 years? If that is the case, then a PCP would, or even a lease deal, would probably fit your budget a bit better than a hire purchase. If that's the case, then you might prefer just to do a PCP. You pay a set lower monthly amount, and every 3 years you can give the car back. You'll probably have a little bit of equity at the end of it to put into a new deal, and then you can just keep doing that. Some people just may prefer that and not really be too bothered about the overall cost. So I have got in front of me pros and cons to each one, and I've also got a base car. So I've picked a particular car, particular model, and I've gone on, I found the cheapest lease deal for that car, I found the cheapest PCP deal for that car. So what I've done for that is I've gone to the manufacturer's finance calculator, I've then gone to CarWow, I've found that car, I've put it in CarWow, they've come back to me with 5 offers, I've picked the cheapest offer, discount, I've then input those figures into Volkswagen's finance calculator, and that has given me a PCP deal value for a 3-year term. So I've worked that out, and I've also done the same thing but on a hire purchase. There goes my washing machine. And also bank loan, which it doesn't matter, it's just your rate from your bank. So the car in question that I've gone for a base figure is a Volkswagen Golf. It's a 2021 Golf Mark 8. It's an E TFSI 1.5 DSG R line. I haven't gone for any options. I've gone for a completely standard R-Line because they usually come quite well spec'd anyway. And I've done 10,000 miles per annum on a 3-year deal. And I've gone on, as I said, found the cheapest lease, cheapest PCP, cheapest HP, and also a bank loan as well. And I've got all the figures, your deposits, monthlies, and total interest, total overall cost, and total cost of ownership using each particular finance option. So what I'll do first is I'll start with lease deal because that's what I started with. So if we go, up on the screen now should be the first finance option I've gone for, which is a lease deal. So what I've done is I've gone on to select car leasing, if you can see on the screen, and I've picked a Volkswagen Golf, as I said, a 1.5 E-TSI 150 R-Line DSG 2021 model, and as you can see, I've already got all the figures, but it's a 36 month agreement. Initial rental here plus admin fee, and that's just under £260 per month. And that is a completely standard R-Line, which comes well spec'd as standard, and initial payment, actually annual mileage. So if let's just go back to our spreadsheet. So it's a 36-month term. The deposit, that is the total deposit including the admin fee, and there's your monthly payments. So the total cost for you to have that car for the 3 years and then you just give it back is £11,366.92. So once you've paid your deposit, which is your first monthly payment, you have then 35 subsequent payments of that, and that leaves you with a total cost of that £11,366.92, and then they come and collect the car. So that's obviously quite simple, isn't it? You phone them up, or you inquire online. They said, yep, we've got that in stock. You submit your finance application, they accept it, and then they deliver the car. First monthly payment, then it's literally hassle-free for 3 years. And then they come and pick the car up at the end of your agreement. So that is probably the easiest overall finance deal in terms of you don't actually have to do anything. You could sit at home, get the car delivered, email them when it's done. It's a very simple way of doing it, and it hides the cost. So because there's no guaranteed future value, there's no total amount payable. Like, you don't know how much you're paying for the car because you're not buying it, you're just renting it. You don't know how much interest you're paying. It's all in the monthly payment. So it's effectively, you don't really know how much of a deal you're getting. You don't know how much the car is because you're not buying it. So it's a very easy way of doing it. There are pros and there are cons, which you can already see on the screen. So the pros for this is the road tax is actually paid for the entire duration of your ownership. So the 3 years, road tax is completely paid for. And as I say there, you get free delivery and free collection at the end of the term. Also, a third party can purchase the car 9 times out of 10 at the end of the agreement, but you are not allowed to purchase it yourself directly. I think it's to do with, I'm not sure, I think it's a tax cost or something. It's the way the lease companies buy the cars. They can't legally sell you the car at the end of the lease, but they can sell it to a third party, like a dealership, for example. So if you know someone that owns a dealership, they could buy it for you, and then you could buy it off them. They can do that, but they can't sell it to you directly. And the other pro is this deal is the cheapest monthly payment. That's even cheaper than a PCP. So the cons for a lease deal is the charges. So if you go over your 10,000 miles per annum, so if you've got over 30,000 miles at the end of the agreement, you will get charged quite a hefty amount. I mean, I couldn't see the actual charge on this agreement because you have to apply for it and they send you the details, and obviously I didn't get that far, but it's roughly 7p per mile plus VAT. So it's going to be around 8.5p every mile you've gone over 30,000 they will charge you for. So that is can be quite expensive if you go over your agreement. I mean, if it does look like you're going to go over your agreement, say you're a year in and you're suddenly doing 15,000 miles per year, you can phone them up and get them to adjust it. So they will adjust your monthly payments slightly higher to account for your extra mileage you're doing. You can do that if you need to, however, they will charge you for that. If you get any parking fines, speeding tickets, anything like that, they get sent to the lease company because they own the car. The V5 is in their name. So any fees like that get sent to them, and then they forward it on to you, but they will charge you between 10 and 20 pounds for every document that they forward on to you. And I know this really bugged me because we have a lease car. My wife's old Tiguan was a lease car, and we had, over the 3 years we've had it, we've had one speeding ticket, and a few parking fines, and they charged £20 for each document to be sent to our house. And I know it's not much over 3 years, it's only 60 quid, but it bloody annoyed me. It is really annoying. So that is a con. And I said there's no personal own option for a lease car. You don't have the V5 in your name, so you can't just sell the car whenever you want. And that brings me on to expensive to get out of once you're in it. So once you've signed up to that deal, the car's been delivered, you've had it 6 months, and then you decide, oh, actually, this car's not quite for me. I could do with a bigger car, like a Tiguan, for example, or you've lost your job and you can no longer afford the car. Then it is expensive. You can't just sell it like you could the other options, finance options. You will have to pay quite a hefty penalty. So this penalty is usually 50% of the remaining payments. So if you're only 6 months into a 3-year deal, the likelihood is they're going to try and charge you 2.5 years payments of half the monthly amount. So to give you an example, I'll just do a rough guess. So what's that? Roughly 125 times 32. So they're going to charge you £4,000 to get out of that car. And now a lot of people probably couldn't afford that, and they'd be forced to then keep the car. So that is another thing to bear in mind when having a lease car. They are very difficult to get out of. And also the other main thing is options will be very expensive. So if you are not happy with a standard car, the reason I picked an R-Line is because they come with a lot of options as standard. But if you wanted a panoramic roof, for example, or you wanted an upgraded sound system or leather seats, that's when lease deals get expensive, because you will need to pay for those options in full in the lease agreement. So if, for example, you want leather seats and they are a £1,200 option, you will have to pay for those fully in your monthly. So 1,200 divided by 36, your monthly payments would go up £33 a month just because you want leather seats. If you want even paint, even any paint that's not a free option, you will have to pay for. So even if you wanted pearlescent black, which is say a £600 option, you will have to up your monthly payments by £16 every month just to have black. So really, with a lease deal, you want to be going for a bog standard car. So you want to be finding a car that comes with as much spec as standard, so it doesn't cost you on the options front. So that is a lease deal in a nutshell, and we'll get everything, we'll get all the finance options together at the end, and then you'll be able to see a complete breakdown of what one is the cheapest. But for now, we'll move on to PCP. So now we move on to PCP purchase. So we've got the same car, Volkswagen Golf, same one. So what I've done is the basic RRP of that car is £28,500. So I went on to Carwow, I put in the Golf, and then I sent it out to the dealers around my area or wherever it is, and 5 offers came back in within sort of about 4 hours, and I clicked the cheapest one. So the cheapest one was actually giving me about £1,600 off, which brought our total purchase price down to £26,425. So I've done the same agreement, 36 months, 10,000 miles per year. And what I've done is I've used the same amount of deposit as the lease deal required, just to keep it even across the board. So the average, so the deposit is what the lease deal deposit was, just to keep it all fair. So once you put once you put the offer that Carwow came back with, took it off the retail price, you've added in Volkswagen's finance contributions, and you've added your deposit, it came back with a monthly payment of £389 per month. So immediately that is over £100 a month more than a lease deal. So that's obviously a lot. And you can see here it's only 3.6% APR, which is quite low. But what a PCP deal does is it gives you a guaranteed future value. And the guaranteed future value that they have given you here is £13,442. So they are guaranteeing that at the end of your 3-year contract, the car will be worth that amount. And if it's worth less, it doesn't matter, because they have guaranteed they will give you that for the car. So that is the minimum that car is ever going to be worth. However, they do usually, or the idea is they under inflate that figure. So A, it doesn't end up costing them a fortune at the end of all the 3-year agreements, and B, it gives you a little bit of money to put in as a deposit for a next car. So it's a bit of a oh look, you've got £1,000 equity in your Volkswagen Golf. Why don't you put it towards a new car? So that is what they do there. So that figure is usually underinflated by around £1,500 on average. Right, sorry, I just had to cut a copy across the top figures there because it all looked a bit confusing. So as I was saying, right, the final guaranteed future payment is £13,442 after your 3-year contract is up. So as you can see here, the total interest in that period is £4,334.61. That is by far the most expensive option to buy a car. And that is essentially because they're giving you a guaranteed future value of £13,442. What you're doing is you're only paying off the difference between the £26,000 here and the £13,000 here, which means your monthly payments are relatively low, but you are borrowing that whole amount. Well, you're borrowing that minus your deposit, so it's about £23,800 you are borrowing, and you are paying interest on the total amount of that. So you're paying interest on £23,800 from month 1, and then it slowly goes down by £390 per month. So that is why it is so expensive. Even at 3.6% APR, your total interest in that period is £4,300. So that brings the total cost of the deal, including interest, to £30,759. Where it becomes slightly tricky and hard to work out the total cost of ownership is because the car, obviously, when buying it, it's brand new, you don't know how much realistically it is going to be worth in 3 years' time. So the only way I could work out this figure here that I've got is by going back and looking at a 3-year-old Golf, which is as close to that as I can find. So I went on, it's gone now. I went on Auto Trader. I found a Volkswagen Golf 1.5 TFSI R-Line DSG on a 67 plate that had done 30,000 miles. So that's as good as I'm going to get equivalent to the car that we are purchasing brand new. And that is what we have got here. So we've got a part exchange price of 13,700, which is actually only a little bit better than a guaranteed future value there. However, imagine we're going to sell the car privately, because that is the most cost-effective way to do it. So they've said the car will be worth up to, or a guide based on, so an average price is £14,900. So I've put in, just to say someone offers you £14,750, you'll probably take it. So I've put that in as a resale price. So what you can do then is you've paid your £30,700, you take £14,750 off because you've managed to sell the car for that amount, and the total cost of ownership therefore is £16,000. That car has cost you £16,009 in 3 years. However, selling it privately does become a little bit difficult, because if you don't have enough money to pay that balloon, it's a bit tricky to sell a car privately with finance on. I mean, you can do it, but the guy that you sell, the guy or girl that you sell the car to, must be happy with you using the money to pay the finance off. I mean, I've done it before in the past. There'll be loads of people that are happy to do it, but it can be a little bit tricky. But that is a different discussion. So, total cost of ownership £16,009. So I've put HP purchase in here as well, because it's effectively the same finance option. So again, we've got the same price for the car, the same discount, same deposit, same term, same mileage, but this time there is no final payment. So what you're actually doing is sorry if you can hear my daughter in the background there, she's just wondering what I'm doing. So there's no final payment on an HP. You are just going to be paying your total amount you've borrowed, which in this case is £23,800, and you're just going to be paying monthly payments for 3 years until that balance final payment is naught. And at the end of the agreement, you completely own that car, which is why the monthly payments are a lot higher, £700, so nearly twice as much as a PCP. However, because your total amount you're borrowing is coming down a lot quicker every month by £300 odd, the interest is a lot less, a hell of a lot less. So your total interest on that agreement, because of the low APR, is only £1,355, which means your total cost is £27,779. Same resale value, obviously, and the total cost of ownership is the £3,000 cheaper, which is the interest difference. So that is the cheapest way to purchase the car with the V5 in your name. So not including the lease deal, so a PCP, HP and bank loan. This is actually the cheapest way to buy it with the lowest total cost of interest, so the lowest cost of ownership. But not everyone could afford £700 a month to splash on a Golf. So not many people would probably go for this option. So we'll go through the positives for a PCP first. It's easier to get finance because you're protecting an asset. So if you fault on your payments and you can no longer afford the car, they will just take the car away, which is the collateral. They'll just take the car, and therefore they're not worried about chasing you for money that you possibly don't have. So it's a lot easier to get accepted on finance. You have the moderate monthly payments. It's not as cheap as a lease deal, but it's nowhere near as expensive as an HP purchase or even a bank loan. Another positive is if the guaranteed future value drops below your amount that you've been quoted, you are essentially better off, because if you'd have bought that on an HP and at the end of the 3 years, say the car was only worth £11,000, you would be worse off. However, if you've got a PCP, they've said the car's worth £13,400, that is what they'll give you for it. So you'll essentially be £2,000 better off. I mean, that doesn't happen very often at all, and that's an extreme example what I said there, £2,000, but it can happen, and it is a protection, so that is a positive. With a PCP purchase, you get the V5 in your name, unlike a lease deal. So any parking tickets, speeding fines, etc. will get sent to your house, and you won't incur a fee. And you can also sell the car whenever you want. You can part exchange it whenever you want, without getting stung big fines for ending the agreement earlier. You'll just usually get charged a settlement fee, which is probably 1 or 2 monthly payments, which will be nothing like a lease deal penalty. So the negatives for a PCP is massive interest costs, the highest by absolutely miles on the others. You will be in negative equity for most of the agreement with a relatively small deposit, and that is because you're paying off such a small amount a month. The car is probably depreciating more quickly than you are paying it off. So if you did decide to trade the car in after a year, the chances are the car will probably be worth less than what you owe on it, making it difficult to get out of. Or if you do get out of it, you'll end up probably having to pay more deposit for a new car, or adding on that negative equity onto your new PCP purchase, which will make it even more expensive, blah, blah, blah. The balloon payment there, obviously the other negative is there a balloon payment at the end. So at the end of the agreement, you've paid all this money a month, but you still have to give the car back. Or you can refinance the balloon and put it onto an HP purchase, and then you can keep the car. If you wanted to keep the car past the 3-year mark, you can refinance that amount. So that is the negatives and positives for a PCP purchase. So we'll just get rid of that. Oh, add on a HP purchase, pros and cons. So it's the cheapest overall deal. And when I say cheapest overall, I'm meaning on the fact that it's the lowest interest that you'll pay. Not including lease deal, because obviously we don't know how much interest we're paying on a lease deal because we're not paying interest, it's just a rental agreement. So this HP is the cheapest interest deal and the cheapest cost of ownership via the conventional route. Paying off the car quicker means you will quickly become in positive equity. So in a year's time, if you want to get a new car and trade it in, the likelihood is you'll probably be in a fair few £1,000s of equity because you're paying a higher monthly amount. Again, the V5 is in your name. You can sell the car whenever you want. The car is completely yours at the end of the term with no finance left. So then if you were to trade it in, you would have essentially a £14,000 deposit for your new car if you wanted. No balloon. The only real negative to an HP is the high monthly costs. Of £700, but that is the only real negative. Everything else is low. Everything else is a benefit. But that said, the high monthly cost is a relatively large negative, and obviously that would put the majority of people off. So I just had to interrupt filming there. I've actually sold my kitchen table and the guy just turned up to collect it. So now I have nowhere to finish this video off. So give me 5 minutes, I'm going to find somewhere to set up and reconvene this video. So I've managed to find our coffee table and bring it into the kitchen to finish this video off. So sorry about that, bit awkward timing. I have no idea where I got up to because I have the memory like a sieve. The last one is here we go. So the last option is a bank loan. So this is slightly different because you're not getting finance from the dealer. You're getting finance essentially from your bank. So here we go, bank loan. So obviously what we're going to do here is we're going to borrow the amount including the discount you got from Carwow Look. So the amount we're actually going to borrow from the bank is, you'll probably borrow around a figure like maybe 23,850 quid, but that is the amount we're going to borrow from the bank. Again, it's going to be over a 3-year deal just to make it comparable to the other agreements. And although I've gone on to NatWest because that's who I bank with, and they say they're going to give you an APR of 3.9%, I've never seen anyone get their quoted representative APR. So the most likely APR you're probably going to get is 6. I mean, even that's been generous. Tesco once gave me 5.9, which I thought was I thought they made a mistake, so I just took it and run. But normally between sort of 6 and 10% is an average APR you'll get from a bank. So I have put at the lower end of 6% for the purpose of this. And obviously that is 2.4% I think higher than the average, than the APR rate from the dealership, which is why your monthly payments are 20 odd pounds higher. That is purely interest. Otherwise this agreement is essentially exactly the same as an HP agreement. We have just got a slightly higher APR, which is 20 odd quid more a month, which means your total interest is more. However, it is still nearly half the price of interest of a PCP agreement, which is why your total cost of ownership is slightly higher than an HP from the dealership, but still a lot less than a PCP. So again, positives for a bank loan is, that should be a negative, not a positive, but it's a higher APR than a dealer. Paying it off quickly again means that you'll be in positive equity sooner. V5 in your name, you can sell the car whenever. Car is yours at the end, no balloon. But the main positives for a bank loan is there are no settlement fees if you wanted to end the agreement after a year, and you can buy and sell the car whenever you want, i.e. there is no finance outstanding on the car, which means it's a lot easier to sell privately because they won't have to worry about the car having finance on and having to pay the dealer, etc. So which is why I've put in these two in capital letters, because the main positives for a bank loan is that the car has no finance on itself. So you don't have to ring up and say, can I get a settlement figure on this car, and they will charge you a couple of monthly payments to do so. So if you usually do a 3-year deal and you want to get out of it after a year or even 18 months, this could actually work out to be overall cheaper than an HP. Yes, you're paying £20 odd a month more in interest, however you may save £400-500 in settlement fees. So yeah, there's your positives, but obviously your negatives is it's the highest monthly payment. It's the hardest to get approved on because you are not tying it to an asset. There is no collateral damage essentially for the bank. They are just relying on you making those monthly payments every month, and it's a higher APR than the car dealer. So that is all 4 of the finance options explained, the pros and cons to each one. So if we just get them all now together, here is all 4 agreements together where you can see them all and the total cost of ownership. So we've already been through all the pros and cons, so I haven't included them here for you. So as you can see, the HP agreement through the dealership is the cheapest in interest. If you want the V5 in your name, you've got these 3 options, and that is the cheapest one. However, as you can see on this particular car, a lease deal was the cheapest way to own the car for 3 months, and that doesn't even take into consideration the road tax for the duration of the contract either, which would probably be, I don't know how much the road tax is for this car, probably not going to be much. It might be £300 for the 36 months. However, it is still the cheapest by quite some margin, nearly £1,700 cheaper than a HP purchase. So guys, as you can see, so there's 4 very different types of agreement. There's 4 very different monthly payment, well, 3 very different monthly payment figures. They're just very different. As you can see, the cheapest way to buy this car over 3 years is a lease deal, coming in at £1,700 cheaper than an HP, and nearly £5,000 cheaper than a PCP deal over the 3 years. However, it all depends on you guys. I mean, if you're happy paying relatively low monthly payments and every 3 years chopping it in and getting a new car, then a PCP purchase might be for you. Again, that could be the same with a lease deal. It could, if you're happy just riding out the duration of your lease with no issues, there's going to be no problems with wanting to get rid of the car after a year, or possibly losing out on a job, for example, and having to cash the car in early, then a lease deal would be for you. However, it is a little bit more risky, so which is why a lot of people like to deal with a dealership. They like to go into a dealership and have that excitement of speccing up a new car, going in to collect it, etc., which you won't get with a lease deal. So it all depends on what you want. I mean, if you want the cheapest monthly payments and the cheapest cost of overall ownership for the 3 months, then a lease deal is for you. However, you will not be able to have the car at the end of it. You will get massive penalty fees if you go over your mileage, or if you get speeding tickets come through, and if you want any options on your car, they are going to cost you a lot of money. However, if none of that bothers you, then a lease deal will be the cheapest way to do it. But if you want the flexibility of having a car for 3 years, part exchanging it, or maybe wanting to sell it after 18 months and you just want a fairly cheap monthly payment, not too bothered about interest, then a PCP deal is for you. If you want to go into the dealership, spec your car, you like to do that, you want to go in and collect it, you like having that element of interaction with the salesperson, then a PCP deal might be for you. Or alternatively, if you want to have the flexibility of owning the car, so the V5 is in your name, you want to sell it after 18 months, you just want to have that flexibility, but you don't want to pay a lot of interest, then maybe an HP purchase or a bank loan may be for you, keeping the monthlies high but the total cost of interest low, but having that flexibility of equity in the bank after the 3 years and keeping the total cost of interest down. So it all completely depends, guys, what you want from the car and what you want at the end of the agreement. You can see it here. The best thing to do is, if you are after a specific car, you know what car you want, just do your research, just like what I've done. This took me an hour to do. All this research took me an hour to do. You can quite easily go on, work out the cost of each type of finance, and you can sit down and go, right, what do I want from this car? Do I want the monthlies low? Do I want the overall cost of ownership low? Do I want flexibility if I decide to get rid of the car after a year? It's the best thing to do is just to sit down, work out all your options, and then just pick the one that works for you. Just thought I'd add as well, this guide works with any type of car you want to purchase, be it new or used. The only difference is, if you want a used car, you might need to find a different type of finance calculator just to obtain that guaranteed future value. A lot of websites have these calculators, a lot of car dealerships have these calculators, even on used cars. So it's fairly simple to obtain a guaranteed future value of a car if you want to work out the PCP cost. As I said, there's loads of calculators out there to give you that help for a used car, and 99% of new dealerships also have brand new finance calculators on their website as well. So this guide works for any type of car, whether it's a 28 grand car, 26 grand car, a 5 grand car, 10 grand car, or even a 100 grand car. This guide applies in the same way. I just thought I'd note as well, with a lease deal, that was a special offer. If you're going to get a lease deal, I would advise you probably only find special offers, because if you want a car that's not on special offer, the chances are it will be like a factory order. It won't be in a deal that they've got, and the likelihood is you'll pay a lot more per month, probably even eclipsing the amount for a PCP. So my advice would be, if you're going to do a lease deal, make sure it is a special offer and a really good deal. So guys, that is it for today's video. I hope that was a helpful insight into the different types of finance options you can have and the different ways you can purchase a car using the finance options and what you want to do with the car. So, as always guys, I hope this video was insightful and you did enjoy it, and if you did, please do give it a like and thumbs up. I'm moving because I'm now sat on my knees and it's getting quite uncomfortable. So, hello, what are you doing? What are you doing? So guys, if you did enjoy this video, please do like and subscribe, and if you haven't already, please head over to my Instagram, which is saving_salvage. Right guys, thank you very much for watching, and I shall see you in the next one. Cheers guys.